Right, it's just ticked past the hour, so I think it's probably worth us to get going, and others can join us as we go along. So welcome everyone to BDO's webinar. We're focused on professional services firms this morning. I know a number of you joined in the past. So you'll know my name is Anna Jarrold and I'm a tax partner focused on advising professional services firms. So for those of you who don't know BDO, it's a global accounting network and we've got over 11 billion US dollars in revenues and provide full range of services, including auditing, taxation services and advisory services. We're in 160 countries plus and got over 100,000 people now. So some of these stats sort of tick along as each month goes past. So today our team is going to give you an update on a range of global employer solutions, and we know it's particularly relevant with the ongoing war for talent in the professional services sector and all the changes that our people are looking for from us of how they spend our time with us. So our speakers today are David Ellis, Jackie Roberts and Dal Origaro. I knew I said I was going to pronounce that incorrectly, Dal, so I'm really sorry about that. David is one of my partners at BDO and helps organisations with their strategic people issues, particularly during periods of disruption or transformation. So as I said, particularly relevant for us all right now. His deep expertise lies in the creation of reward and broader people strategies, so stepping outside of the pure tax realm today as well. So Jackie Roberts is well known to many of you, an associate director working regularly with us in the professional services team, bringing 25 years of experience in the employment tax arena. So many of you will already know that Jackie provides her clients with consultancy advice on all matters of employee compliance, including payroll, termination payments, employment tax status, IR35 rules, expenses and benefits, tax NIC benefit, efficient arrangements, etc., etc. So Dal has recently joined BDO. I need a bit more practice with the surname Dal, but won't take me too long. After 6 years with HMRC's National Minimum Wage team, and actually this is becoming more and more of interest to professional services firms, and it brings with him deep knowledge of how HMRC apply the complex national minimum wage legislation, as well as the experience of the end-to-end process of an actual investigation with the revenue. So that sort of inside track about how things work. So unsurprisingly, with that lineup, we've got a broad range of topics that we're going to get into today. So the national minimum wage, strategic reward, current issues and the concerns, and then the labour supply chain. So what's happened 14 months on, where are we? We'd like to pick up on questions as we go or at the end. So please do ask Q&A as we go through. And we've got a feature on the top right-hand side of the screen that you can use to pick up any questions that you've got as you go through. And I will ask those questions probably at the end. And if we don't have an opportunity to do it, then we'll pick up with you separately. And if there is anything as we go through that piques your attention or that you want to explore a little bit further, do get in touch and we can get in contact after the webinar to explore what you've got on your mind. So as always with these sessions, that we will finish within the hour, and we'll make sure that we send you a recording of the webinar a few days after the event, along with the slides. So first up is Dale, picking up on national minimum wage. Dale, over to you.
Thank you, Anna. Okay, yes, so national minimum wage, I'm going to kick off with the common areas that employers can fall foul of, and we've got quite a busy slide here. But the main two relevant ones within the sector that we're talking about today are salary sacrifice and deductions, as well as incorrect worker type. So many businesses do have systems in place to flag any NW risk as part of a salary sacrifice arrangement. However, in my experience from both HMRC and recently joining BDO, is that these systems often work in isolation and don't link to other processes and services that might be offered to workers that could also reduce pay for NW purposes when you look at them in a cumulative way. So what areas the HMRC typically focus on for salary sacrifice? Pension is the biggest one that they will look at. The two scenarios really here. The first one being workers that are paid on or close to national minimum wage. Any amount that is sacrificed directly reduces the workers' pay below NNW because of that. That lack of buffer there between the NNW rate and their salary. So the pay after the salary sacrifice in HMRC's view is what is counted for NNW purposes. So if that's below NNW, then you've got a direct breach there of national minimum wage. The second scenario arrangement that I've seen is workers that are on a higher salary, maybe that are nearing retirement and sacrifice anything above NMW or even all of the pay. Sometimes I've seen into their pension pot for a set period of time, or workers that are on higher salaries that may just want to increase their pension contributions generally to build up the pension pot in earlier life. Again, pay for those workers in HMRC's view is what's left after the salary sacrifice. And in isolation, that may not cause an issue, as I explained earlier. If the salary is higher, it's not necessarily going to cause a breach because you've done that salary sacrifice. But the risk with the higher salaries often comes because less focus is placed on maybe monitoring or tracking the hours that workers on higher salaries do in a week or a month, because there's no need really to do that because of the salary's way in excess of NW. So that sort of doesn't take much importance in the grand scheme of things. But if salaried workers are consistently working additional hours but not receiving any additional pay, then that lack of monitoring can quickly become an issue. And it's often where I've seen businesses inadvertently fall foul of the rules, because on unpaid working time, those additional hours, coupled with a salary sacrifice, maybe a couple of salary sacrifices, will dilute that buffer that you've got in the pay. And there's often no process in place to prevent that or to check whether that is bringing people below NMW. So therefore, it's so important that the process you've got in place are robust enough to manage the NW risk, even for higher salary workers that you cover should HMRC ever come knocking at the door.
Yeah, and Dale, it's really easy to think if you're in a professional services firm, often higher paid sort of environment, that people wouldn't fall foul of this. So what sort of range of salary would you suggest that employers should be sort of thinking about in this? Because otherwise it looks like that you've got a massive portfolio of people in your business. Where would you pitch this as a sort of where you start thinking about it?
Yeah, so from my experience, I've seen cases where HMRC will look at workers earning up to 30k. So 30k and below is where I would say that the pinch point is, and I have seen underpayments for workers that are on that salary. And the reason for that is mainly due to a combination of breaches. So it's not just a salary sacrifice, but it does highlight the need for joined up controls across different areas of the business. So, for example, I've seen cases where a worker, say, got a salary sacrifice for pension or for cycle to work, and the business rightly do an NMW check to see that individual salary sacrifice doesn't bring them below an NMW. But then there are other parts of the business or other services offered to workers, voluntary services such as savings schemes, voluntary arrangements where workers might purchase goods from the employer or from third parties via the employer, via the employer's business account. And all of those kind of arrangements are likely to reduce a worker's pay. But businesses fall foul of that because they don't have the checks in place, a joined up approach to the checks in place. So one, individually they may not reduce, but collectively, when you look at the total value, they're bringing that worker's pay below national minimum wage. So I'm going to move on to the incorrect worker type now, which will help understand how a 30k salary could still cause NNW issues. So just the previous slide still. So just on that same slide. So under the common areas that we've got incorrect worker type. So there are 4 different types of work in the national minimum wage rules. Time work, where a worker is simply paid an hourly rate for each hour that they work. Salaried, where a worker is paid a fixed monthly payment each month regardless of the hours that they work. Output, which could be somebody paid based on how many garments they make in a factory, for example. And then anybody that doesn't fit into those 3 categories would default into unmeasured, which is required to be paid an hourly rate for every hour that they work in that pay period. So the most common category that employers get wrong, in my experience, is salaried work, because the rules are so complex around that area. There are 4 different criteria to meet for salaried. They must be paid an annual salary, which most employers get right. That's absolutely fine. Must be paid in equal weekly or monthly instalments. Again, there's been some changes to that from April 20 to include fortnightly and 4 weekly. but we'll go on to that in the next slide. They must be paid for an ascertainable number of hours each year, and they must only be entitled to a salary and a performance bonus. Again, the performance bonus element of that changed in April 22, and we'll look at that again in the next slide as well. So that was changed to include things such as a salary premium, which are things like additional pay for working bank holidays or additional pay for working weekends. And again, we'll touch on that in the next slide. So in my experience, the part of that criteria that employers often fall foul of is the ascertainable hours point, and it usually comes down to the wording in the contract that isn't clear enough that you can ascertain the hours for the whole year. So wording such as your hours may be between 8 a.m. and 8 p.m. Monday to Friday, or between Monday and Sunday. If you can't pinpoint the hours in the contract, then that can be an issue for national minimum wage if you're operating a salaried workers arrangement. And then workers that don't necessarily understand how the contracts work, because during an NMW audit from HMRC, they will look at the contracts and they will speak to workers to determine what type of work that work is carrying out. And that's the starting point for all HMRC investigations. They'll have to determine the type of work before they can then determine whether there's been a breach of national minimum wage or not. So the problems you get when the salary criteria isn't met is because they're unlikely to fall into time or the output worker criteria. They'll default into unmeasured. And obviously, as part of that, as I explained just a few moments ago, workers in that category have to be paid for every hour that they work. So if you've got a situation, one of the advantages of a salaried worker type in national minimum wage rules is that business can flex up and flex down in their busier periods, so people can work more hours in the busier periods and take that time back in the quieter periods without any impact on national minimum wage. If they fall into the unmeasured category and you've not got that salary criteria right, then in those busier periods they have to be paid for every hour that they work in that period. So if you couple those additional hours in your busier periods with any salary sacrifice or any voluntary deductions that reduce pay, then your 30k salary quickly dilutes, and you're getting towards that national minimum wage rate or breach of the national minimum wage, again depending on how much the deductions are, etc. But yeah, 30k is definitely the benchmark I would be advising to look at or to have risk processes in place for. So that's where we are with that one. I'll move on to the same slide now with the naming and shaming, and I'll just talk a little bit around that point there. So if you can go back a slide. So just on the right of this slide, where the naming and shaming and the breaches that were most common with employers in the most recent round. 37% of those employers named. So HMRC, if they do find a breach of national minimum wage, they do name employers in the press, and there's also a 200% penalty attached to any underpayments found. So in the latest round, which was December 2021, 37% of those named were for deductions from workers' pay. 29% failed to pay workers for working time. 9% was in part due to the incorrect working type, and the 16% paid the incorrect apprenticeship rate. And I'll just touch a little bit on the apprenticeship rate because of the pause in COVID, because of COVID-19. So if you do engage apprentices and you pay them the apprenticeship rate, if they stop their studies during COVID for whatever reason, they had a year off or they had a certain period of time off, then it's worth noting that time doesn't automatically extend. The initial date that you set the apprenticeship to end still stands unless you've renegotiated a new contract of apprenticeship. So that's an important one to know if you do engage apprentices and you've had that pause during COVID-19. The bottom bit of that slide touches on the impact of COVID and HMRC's response to that. So HMRC did scale back some of the sector-specific compliance work that they do in the closed sectors due to COVID-19 pandemic. So we do expect HMRC to have a high focus on those sectors in this financial year, and they're also looking at different ways to target workers and improve worker complaints because of the impact of COVID-19. And there's a perceived view from HMRC that workers won't come forward as much as they did before the pandemic because of the impact of the pandemic and the fear of losing their job. So they're doing things like placing adverts on gaming websites and in between games that people are playing online. They're also sending out text messages to workers that are paid at or just above national minimum wage. Again, they're increasing the numbers that they do that. So the worker complaint angle is that any complaint that HMRC receive, they do have to do a full investigation for that. Whether that then leads to a full employer investigation, they come out and do a full audit, is down to HMRC, but they do have to consider every complaint that they receive, so that they're driving both sector-specific enforcement, and they're driving the worker complaints as well. If you can move on to the next slide, please. Thank you. Okay, so I mentioned in the previous slide around the salaried worker changes, and these changes came into effect from April 2020. Before April 20, only workers that were paid on a weekly or monthly basis could be salaried workers under national minimum wage rules, and workers that received any premiums or working bank holidays, working weekends, were also excluded from that. They made the changes to this to include more workers in that. So again, if you had workers that were fortnightly paid or 4 weekly paid that didn't meet the criteria previously, may now meet the criteria. They've also allowed salaried workers to receive premium pay. So although the premium pay may not count towards NMW pay, the fact that they receive that payment wouldn't exclude them from being salaried. And then the third point there from April 6, 2020, was that the employers were allowed to choose their own calculation year. So this is a key point, because prior to April 2020, the calculation year was based on the day that particular worker started employment, which, as you can imagine, could be a complete nightmare to manage, and not many employers would track all of those calculations. Started in June, so every single worker could have a different year that their salary is looked at from HMRC's point of view. So they changed the rules to allow employers to pick their own calculation year and give advance notice to their workers that that's what was happening, so that they could align that to whether a business wants to do that by tax year or a calendar year, however the business wanted to do that. The deadline for that has now passed. That was April 22 for those changes to be made for businesses to make those changes. Sorry. So we're now at the point where we're expecting HMRC to challenge us a bit more, and some of those workers that maybe haven't had the calculation years aligned could still have the multiple different calculation years for multiple workers. So it's something to be mindful of if you do get a HMRC review, or you're looking at aligning your salaried workers along those rules. Okay.
Right. Yeah, wonderful. Thank you, Dale. Anything else to add before we move on to David? Dale, was there anything else? Or
no, I just if we just skip to the areas to consider slide. So just that.
Yeah, sure. Yeah.
Yeah, they're just the one after that. Sorry. So areas to consider for national minimum wage is your contract. Is your worker type correct? Do workers regularly work above the contracted hours? Do the salaried worker changes impact on your business? And then process-wise, do your process consider the cumulative effect or risks that NMW pay? A high-level process is aligned with what happens in practice. So often we see processes that are fine at a high level, but then in practice, local management or local practices undermine those processes. And how the process is made clear to the workers understand what the processes are and why the processes are in place. And that's everything from me. Thank you.
Okay, thanks very much, Dale. Over to you, David.
Thanks, Anna. Thanks, Dale. Right, I'm just going to talk a few minutes, if I may, about, at its simplest, I suppose, what clients I have been working with over the last few months have been most concerned with in the broader context of how people are being paid. So for good or bad, this isn't picking up the minutiae, I suppose, of how benefit A is taxed versus benefit B or anything like that, but looking at it from a a broader lens, or through a broader lens, I suppose, which is focusing on what are people worried about now in the context of how they are going to keep and indeed where they are interested in doing so, bringing new people to their business for the longer term. So if we could flick to the next slide, I'll position what I have to say using this sort of wheel thing that we have here. So ultimately, what I've put round this circle are the things which generally in a professional services context are driving the ability of an organization or firm to attract, retain, and get their people to go the extra mile. It's carved up into 4 kind of quadrants here. Some stuff to do with comp and ben, which is my day job, I suppose. Some environmental factors, ultimately, which go to the root of whether people like working at the place they do. Some things to do with career and broader opportunity, and some cultural aspects. Now, all of these things are important. You can't say I'm going to focus on pay and not have a nice culture. You can't really go, this is the place to work in the context of how flexible we are in terms of the offer we put on the table, if nobody has a career as a consequence, because it doesn't take them anywhere further. So this is not about saying some aspects can be focused on at the expense of others. But what I have done for you is put some boxes around the aspects which are particularly of concern at the moment. Some of that is what I'll call post-pandemic, simply because our changed ways of working have changed the way that we are viewing some of this stuff. Some of it, I hate to say it in a professional services context, is a bit wasn't it ever thus, i.e. we've always been wrestling with these things, so we may as well, if we dare, start to think about how we're going to address them. So, for example, the box there, which is ringed balance and choice, is in a professional services context, this thorny question of hybrid or flexible working. What is the firm going to do to respond to the fact that people have been working actually quite comfortably not in the physical workplace for a number of years now, and actually are quite happy continuing with that? A firm which is not putting on the table a clear proposition in that space will have a problem. So it doesn't all need to be the same thing. There's no benchmarked outcome to this, but what suits the firm and suits the people needs to be clear. People need to understand what an important part of the offer that it is. The second thing I've put there around the environmental points relates to safety and security, and they are linked, of course, because the concept of being safe at work is not something which in a professional services context we used to be massively vexed by. It was kind of taken as a given. It was a relatively safe place to be. But of course, where we've been through a pandemic, the concept of how do we make sure people are comfortable and safe in the workplace is now paramount. Again, we just need to be super clear what that is. Now, some of this other stuff, let me just focus on 2 other aspects before we dive into something in a little bit more detail. Progression in a professional services context, which hits the career quadrant, is hugely important at the minute. So we are doing work with organizations who are wrestling with the simple fact that they have some people who wish to be partners or senior leaders in their firm, some people who look at that job now and say that is the last thing I would ever want to do, some people who say I really enjoy selling but I'm actually not that interested in delivering, some people who say, well, I'm really technical and I want to focus on building that, but I cannot bear trying to punt this out to a client and get them to pay money for me. In our old world, it was pretty much a given that in order to succeed, you had to have a balanced capability in all of those areas, leadership and technical and selling. Now we're actually reaching a place where for once we've got our heads around the fact that you don't need to be a partner. You don't need to be 100% focused on technical. You don't need to all sell to the same level. We're quite comfortable if you choose to stay at this grade for a significant period of time. We are sort of comfortable if you choose to leave and come back. We're not as comfortable with that, but we're sort of comfortable with it. And crafting a career proposition for people that brings that out is therefore critical. The other piece I'll flag up relates to variable pay. So think about this. In a professional services context, it's always been pretty clear that you got paid X for doing the job. But the thing that firms have never been quite as comfortable with is this is our approach to bonus and this is how much it's worth to you. It's not that they don't use them, it's just that they're quite reticent about explaining what a target payout might be under a bonus arrangement and what that might look like at max. And they're very reticent about explaining this is a reward for long-term value growth in an organization. Even in a leadership role, even in a partnership role, where of course the annual sweep of profits off the table is how ultimately the structure really drives year on year. So what we are wrestling with at the moment are organizations who are really being pressured, I think is the right word, into looking at what their approach to variable pay is, and whether or not they need to be much, much more purposeful around how they land that in terms of the clarity of what it can pay out and the focus on what's it for. So think about this. We've got a world, which is what this wheel is describing, which you have to look at in the round in the context of keeping people in the business. We've got some particular tensions at the minute around balance and choice, some things around safety, some things around career, and some stuff around pay. And we've got also tucked away, which is the final box here, just the straightforward construct that people really want to work at places now which do good things. I want to make sure the place I work in has got purpose. We land in a place that says if you are looking at how do you spend money to keep your people in the organization, how you apportion and determine where that spend goes has never been more complex. So rather than talk about any of that, what I thought I'd cover in just a couple of minutes was how does that impact where organizations are this year in the context of their annual salary review, specifically because we have inflation running at somewhere in the region of 10% in the UK. It's significantly higher in some countries, just to be clear, if you've got a global organization sitting there, but 10% is high enough to be going on with from any organizational perspective. So if we could flick the slide on, I thought I would just cover, I suppose the theory that we work to in the context of how does one incorporate inflation into your annual salary review. And it's as simple as this, I suppose. We are not used to managing high inflation outcomes. It's just not something in the UK we've had to deal with for years. So reward professionals and business leaders are actually not that comfortable with the messaging that goes next to what you are doing with your pay review when inflation is this high. So at its simplest, rising costs of living puts massive pressure on an organization in its pay review cycle. So you have to have a response to it, specifically because employees are saying, what are you going to do? Then what are you going to do about it? And here's where the nuance comes, I think, which is ultimately an organization is going to have to be super brave and be really clear that whilst inflation is an input to how much people are paid, it's not a driver to determining how you allocate your annual pay review spend. So clearly, if you have a huge bunch of people on minimum wage, whether it's national minimum living or whatever, where inflation is high, there is a response to that in some way and at some stage, which shifts that lower echelon of pay upwards. That creates, I suppose, an adjustment through an organization as pay goes up, which ultimately leads to rises in market rates across the breadth of role. But of course, when you do a pay review, you're really only looking at what the going rate for the job is. That comes from pay data. You look at what the going rate for the job is, and you deploy your pay review where you have people sitting below where you would wish them to be in the context of what the going rate for the job is. Whether inflation is at 10%, 20%, or 3% is almost neither here nor there. For fairness reasons, you start at what the going rate for the job is and you deploy your pay review on that premise. So if we flick on to the next slide, we kind of bring that out, I suppose, in the sense of it is tempting in a high inflation economy to think around pay rises for all across the board. But where the cost of living has gone up to the level that it has, let's just be super clear that that hits the lowest paid the most. It is absolutely not impacted equally across the board. Where you've got senior people in an organization, they are less impacted by inflation. And generally, some level of performance pay forms a higher part of the senior employee total package. So you can get to a place where we know it hits the lowest paid the most. We know senior people are less impacted by inflation. We know there's a higher level of performance pay sitting at the senior employee end. And of course, if you simply pay the same amount to everyone in percentage terms, you are baking in all of the problems you had before to a greater level. So what we would expect to see in our inflationary driven world today is something which is a little bit more structured, which ultimately is saying we are happy to deploy our pay review completely driven by where the market says we should, but focusing on where we need to higher performance pay where we think it can make a difference. It's not that we're ignoring inflation. We are simply using the spend that we've got, hard fought that it is, out of the budget that we've got, where we think it can make the biggest difference. A ton of this sits around the story you tell your employees. And I mean story as in the narrative, not the thing you've made up, just to be really clear. I mean, I think that's an important point. This is around honesty, and it's around being super clear how you've spent your money and being seen to have done so in the way that you have described. So it's an absolute canter through, but I just thought it would be interesting probably to spend 2 minutes talking about the thing which I suppose is worrying professional services firms the most in the context of their spend this year and where it is heading. Yeah, I think I'm done.
Yeah, David, and I agree with you. I think this is something that's on a lot of people's minds in the professional services world. And I will take the bait, because you've kind of been really clear that there is a succinct amount of money to apply to pay reviews. And actually, you kind of led the witness a little bit, but I will ask you the question, which is, if you've got a budget and you're looking at where to apply it, you talked about applying it on, do your benchmarking, look at what is the going rate for people's reviews. But say you've already done that, and then there's an element of money effectively left over. Where would you suggest that this is getting applied there? Are you saying that in this kind of a world, then we really should think as professional services firms that looking at the sort of perhaps the lower paid people that are really going to be affected much more in their pocket by inflation, because more of a proportion gets taken out by rent, more as a proportion gets taken out by food and travel and all those sorts of things? What would you say?
I think it's a really, really important point in here. So think of it in two ways. Firstly, it is absolutely the case with inflation at this level that the more certainty you can provide people at lower pay levels with what they will be earning, the better. So yes, you could consider ring fencing a higher proportion of your pay review for that population. You could even consider, if you have such a thing, converting an element of what would be a variable bonus into fixed pay, because it's the certainty that will do the most benefit for your people who earn more. And obviously professional services firms usually have those people. There is an interesting debate around whether instead of any of that stuff, you would think about something which was more performance related, so as to drive a different kind of outcome for the business. And if we look at it in those two ways, yes, there is absolute merit in ring fencing additional spend for your lower paid people to increase the certainty of what they have to spend week on week. But if you have value to deploy at a more senior level, it's very tempting to look at whether you can get better bang for your buck and do that on a more performance-driven basis.
Yeah, okay, brilliant. Okay, thank you, David. I think we could spend the whole hour on this, and I might think like that going forward, but that's really helpful at this stage. Thank you. And there's plenty of other things to consider in Jackie's world as well. So whistle-top store from David, but over to you, Jackie.
Thanks very much, Anna. Yeah, so I'm going to talk to you about the latest developments in the labour supply chain. And I've mentioned there that it's 14 months on, because of course that's 14 months since IR35 came in, and a lot of what I'm going to talk about is IR35, but more in the round than we may have touched on before. So what do I mean by the labour supply chain? So labour supply chain, what we're essentially looking at is any ways in which an organisation engages individuals that's outside of the normal payroll system. So self-employed consultants, individuals via agencies, and of course, individuals via personal service companies. So the responsibility of the employer has always been to adhere to PAYE and national insurance obligations. And of course, as I said, the primary labour supply chain rules are around IR35, which came in April 21. But also around that, HMRC are expecting additional processes to support where IR35 is not appropriate. And I'll go into that in a bit more detail at the end. But first, let's recap on the IR35 rules very quickly. Jade, if I could have the next slide, please. So here we have some standards, typical labour supply chains. The first one being very straightforward. We have the end engager client that needs to undertake an employment status test, maybe following CEST, which appears to be the majority of clients and people that I speak to about how they are doing their employment status tests. They would then send the status determination statement to the worker. And then if the individual was deemed to be an employee, they would have to go through payroll. And if they're deemed to be self-employed, they can be paid gross. So that's nice and straightforward. So it might be that the client is actually in the middle there as the intermediary onward providing services to a customer, and that customer is the end engager. That's typical in, say, a consultancy business where they are providing onward services, or even in the recruitment sector. But the client is the intermediary. The end engager is the one that is responsible for the employment status assessment and taking reasonable care in that process. So what you would have is the end engager, once they've taken that reasonable care, essentially they would then pass the SDS to the client or the fee payer, the one paying the personal service company. Essentially when the SDS is passed over, that is the point at which the end engager has passed over responsibility for any PAYE and NIC. Before that stage, the PAYE and NIC actually remains with the end engager. So it's essential that reasonable care is taken. The final example there is where you've got an agency, and so that's fairly clear that in this instance, the agency would be onward providing individuals to the end engager. There's no complications about who is the end engager here.
Jackie, just sorry to just stop you. Just when you were talking about clients taking reasonable care, and obviously, you know, when it's not defined as such what reasonable care is, then, you know, every individual might have a different view about reasonable care. So what's HMRC's view on what reasonable care actually means in this context?
Well, in fact, originally we were thinking that HMRC's view on this would be that reasonable care is in the actual determination of the assessment, so the employment status assessment. Of course, that is the fundamental to IR35, that the end engager is having to do that. But more now, HMRC's view is that they want to see robust processes and procedures and policies in place to show that reasonable care has been taken in the whole process rather than just employment status. So were there to be a PAYE and NIC liability, if reasonable care hasn't been taken in implementing that process from April 21, that could well affect the level of any penalty that was sought by HMRC.
Okay, so it's end-to-end processes people have got to be really careful about, not just one
Indeed.
aspect of it. Yeah.
Yeah, absolutely. Can I have the next slide, please? So what have we seen in the last 14 months? Because that's why we're here. I'm not going to go through all of the intricacies of IR35. We've done that in a previous webinar. So what we have seen is that the processes that have been put in place at the beginning are not necessarily capturing all of the personal service companies in the supply chain. Clients still don't have robust processes to identify personal service companies. A lot of what we've seen is that it's quite easy to identify someone who sits in the office who is providing their services via a personal service company, and therefore those are the ones that get concentrated on. But as we've seen in the previous slide, it's also important to ensure that those that are indirectly engaged are also taken into account. As we've seen, the end engager has that initial responsibility and it can't pass on that responsibility until it has taken time to do the assessment. The other one is where you have companies that are procuring services via procurement rather than maybe through the business engager. Here we've got systems where a statement of works might be used to procure a supply. But what's important is to understand if it's a supply of service, i.e. individuals personally providing service, or whether it is a service that is provided by a supplier that's entirely owned by the supplier in its responsibilities.
Yeah, it sort of sounds really complicated to work out which is which, Jackie, in terms of what you might see as a normal sort of consultant on an engagement and then versus procurement. So how do you think our clients who might be the sort of end engagers in this world manage this, the difference between the procurement piece and the consulting normal arrangements that we might see?
What we've seen is statements of works are being used as a almost like a system to bypass IR35. If you've got a statement of works, that looks like it's going to be a holistic provision by a supplier, and therefore it's the supplier's responsibility for any IR35, and our client engaging that supplier is not the end engager, or that's their view. But what you have to do is look at the details around that statement of works. What actually is being provided? Is it people and the individuals are responsible for the deadlines and working with integrated within an organisation? Or is it like it should be if it's a genuine statement of works, the supplier has the total responsibility of the delivery of that project? And that's a very important point. And the final one on this slide is the 45 days. So essentially, companies have been of the understanding that an individual, once it's received its STS, the statement determination, that they have 45 days to appeal. That's not actually the case. It's actually that the individual can appeal at any point, and the end engager has 45 days to deal with any appeals that might be lodged, which is slightly different in its interpretation and needs to be a robust process put in place to deal with appeals when they come in. So can I have the next slide, please? So what else have we seen? So we've seen a lot of employment status assessments using CEST that have come out with an incorrect conclusion. Most of that is about trying to interpret HMRC's questions. So unfortunately, if you put rubbish in, you'll get rubbish out. So you have to be very careful about interpreting HMRC's question. One example of that, a very simple one, is that there is a question in the CEST tool which asks, does the worker, incur expenses before they are paid? So a lot of our clients have interpreted that as reimbursed expenses. So they've incurred some costs and before, so they incur those costs and then they are paid them. But it's actually what the amount that's being paid as the fee that they're referring to in the question. So it's not very clear cut. And if that's one of the simplest of questions, real care has to be taken with the remainder of the CEST questions. We know that HMRC has said that at least 20% of the CEST outcomes are actually unable to determine, which leaves our clients in a position of, well, what do I do then? Because there's an unable to determine, it's down to the individual professional service firms to conclude what other information could be used to determine if they're employed or self-employed, and making sure that that is careful consideration. And of course, once you've done the employment status assessment, we need to make sure that there is sufficient evidence to support those conclusions reached. If ever there was an HMRC inspection, it's all very well having a copy of the CEST determination, which shows you the answers, but it won't wash if there aren't any supporting evidence of how you've concluded on each one of those answers. Next slide, please. This is just a bit of a busy slide about why it is actually important to get this stuff right. There are plenty of ways in which HMRC will be looking at IR35 in the future. There's specific IR35 targeted reviews, reviews on labour supply chain in its entirety. It could be part of an employer compliance review. Even comes up as discussions as part of the customer care manager wanting to know more about the business. It could be as part of analysing the tax risk policy that you have in place, or senior accounting officer, corporate criminal offence, we go on. Obviously lots of ways in which HMRC will be considering this. And then there's just the slide there about what that actually means in terms of if it was a deemed employment and it was incorrect. You've got your tax rates, your national insurance, not forgetting that national insurance has increased this year with the health and social care levy, which will be a separate charge next year, and the national insurance rates go down again. Then you've got interest, and actually that's 3.5%. There's a little bit of an error there. What with the interest rates being affected, it's considerably increased. And then finally, the penalties, if reasonable care hasn't been taken and a disclosure has not been made voluntarily, you're looking at 30% plus in terms of penalties. Can I have the next slide, please? So what are the other areas that need to be considered? So you've got IR35 applies to all personal service companies, not just UK incorporated ones. There is an exception, and that would be where the individual is via a personal service company, never comes to the UK, and they're not tax resident. If you've got someone who's tax resident via an offshore personal service company, they still fall within the rules, and that is something that we're seeing the discussions about, and it's being missed. We've also got the supply chain due diligence. That's a bit of a tongue twister today. So where you've got a company that is engaging an agency, the agency, you would assume, would be dealing with all the PAYE. They should be a UK agency. It should be an agency that has all of its individuals on the payroll. And the agency is obviously deducting PAYE and NIC. However, that's not always the case. And HMRC want to see an end engager ensuring that that is the case. So due diligence needs to be in place to ensure that that is the case. And then finally, this is something that HMRC have been pushing more recently, is around the mini umbrella companies. And they actually believe that this is tax evasion. So it's important that if you see in your supply chain an umbrella that looks like it might have mini umbrellas, that essentially you check to make sure that there isn't any PAY and NIC avoidance. And the reason that these schemes are used is because each one of those little mini umbrella companies that has employees in, so it's employees and PAY and NIC is being deducted, is because each one will have its own employment allowance of £5,000, which means that no employer's national insurance is paid on that. There's also a VAT avoidance there by using the flat rate VAT scheme. Next slide, please. So we've got all of that in place. We're thinking about the labour supply chain in a wider context. So what we thought we'd do is just set out some of the thinking around what can be done to ensure that this labour supply chain is robust. I think firstly, there's still an amount of training to be done on IR35 to senior stakeholders, as well as the business engagers and those that are actually dealing with the compliance, so they understand the importance of IR35. I've said there already that you need robust policies and processes in place to track the actions that you've taken all the way through from onboarding to payment. We've been doing more around preparing process maps of a robust IR35 activity. Therefore, when HMRC come in and you were able to show them your process maps, you can show them what your policy is around that, and they would understand it. There's also due diligence checklists and templates that could be done to make sure that conversations are happening in that supply chain with those below you in the supply chain, and even above if you are in the middle of it. We have helped companies do terms of reference for an IR35 committee, so that when you're unable to determine statements, what happens then? There could be a committee to discuss and conclude with full records of what's been decided in terms of employment status. We've looked at decision trees. So when you've got a very high population of individuals outside the payroll, perhaps you need to decide which ones are looked at first, which ones are the high risk ones to your organisation. So decision trees that would assess the risk of the status. And you've also got decision trees to look at how you assess whether a statement of works is caught by IR35, and then including step-by-step procedural guidance that we have provided on all of the above and employment status. Next slide, please. There we go. That is a run through of the labour supply chain. And if you've got any questions, do let us know. Thanks.
Brilliant. Thank you, Jackie. And thank you to Dal and David as well. If you'd just like to put your videos back on. We've got a few minutes just to pick up on a couple of things. And I would say that the sort of question around that you've all been talking about is there's a heap of compliance requirements. And actually, Jackie, you were talking there about getting processes and procedures right in order to make sure that the end result is all at least been considered effectively. So there's some judgment calls, but actually what have you done in order to make sure that the judgment and all of the information that goes into that judgment has been accurately assessed? And David, you were talking a lot also around actually there needs to be some deep thinking about not just what we offer our people, but how we communicate. So all of this comes to what Dale was also talking about, making sure that there could be just one person in your organisation that falls foul of the national minimum wage requirements because of being flexible, because David suggests that, you know, we really need to be flexible with people because there's an offer on the table to them, which is this sort of whole heap of sort of different layers around career, the environment, you know, what is the vision? How do we compensate people? So that, you know, the world that professional services are facing is hugely complex. So if you were each to just say one thing that actually you're suggesting that people just think about at the end of this webinar, amongst all that complexity, you know, what would it be? So Jackie, for example, you know, how much are HMRC really going to look at this, for example, if they're so busy with, you know, everything else? So is there anything there that you can all pull out and just say, look, I know it's tough, guys, but actually you do need to be thinking about this?
Yeah, thanks, Anna. So it's clear that there are going to be some cuts to public services that might affect who is going to be working at HMRC, and it might be a more reduced compliance service. However, CJRS, we already know, has got 2 years funding to review CJRS. I'll let Dale talk about national minimum wage, but what that also means is that in IR35, they've taken all of this time to implement new scheme because the old one wasn't working back in 2000 to 2021. And now is the time that HMRC can actually look at the end engager rather than the personal service company non-compliance. And therefore, I feel that HMRC will be undertaking plenty of IR35 reviews in the future.
Yeah, so focus on the processes, like you said in your slides. There's no sort of a quick win in this, but if you get it set up right, then it should be right for the future.
Yeah.
Okay, so Dale, do you want to pick up next?
Yes, we've actually had a question in, Anna, about salaried employees for national minimum wage in the chat bottom there. So I'll answer that question. Yeah, sure. The question is for salaried employees, if they work additional hours over contracted hours unpaid, does this dilute pay, and so could this be an issue for NMW? The short answer to that is yes, but you also need to consider the calculation year I was talking earlier. If your calculation year doesn't align with your toil policy or align with your processes for your business year, then you could have that cut off where the calculation year they've done extra hours, but in your business year they're due to take that in the next month after their calculation year ends. If that's the case, then there's definitely an issue there. It all depends on when the time is taken back and what hours they've done over that whole calculation year. So it's a complex subject, but you know, get in touch if you do want to discuss that in any more detail. In general terms around HMRC activity, we are seeing their enforcement activity go back to pre-COVID levels. Complaints are low, as I said in my session. So if complaints are low, HMRC tend to then put their resources into the sector targeted enforcement and do more non-worker complaint investigations. So yeah, short answer is yes, HMRC are active in the enforcement space.
Yeah, so from your perspective, look at your employee population and work out where the risks are.
Yeah.
And then, you know, do the calculations to make sure you're not going to fall foul of it, because the reputational risk of that is huge.
Yeah.
Okay, and David, you have literally 30 seconds, so let's see how well you can do in that.
Just going to say one word. My word is segmentation. If you look at your populations segmented to reflect their differing needs and requirements, then you will reach a better outcome than if you take your entire organization as a whole and desperately seek to treat them all the same. It's not an easier way of doing it, but it's definitely a more effective way of doing it. And that applies to all of the things we've been talking about today. It's absolutely fine to look at these populations in the groups which define them, rather than saying we have a one-size-fits-all approach to all of this stuff, which will not serve you well.
Yeah, so some proper thinking that is required there, David. Thank you. Well, thank you all for all of the speakers and for the questions that are coming through. We'll pick up with some of those after the call. Much appreciated. As always, we will circulate the slides and the recording, and we'll leave it there. Thank you very much. Have a good day, everyone. Bye-bye.